Timothy, first of all, your take on today's trade. Certainly the market doing better following the release of that HSBC flash PMI for China.
It is. I mean, the market was very quiet this morning and was just awaiting that Chinese data, which came out at 12:30, which did come in quite a positive number there, 49.5 for the month of July. So that's a 5-month high for that read, indicating that manufacturing activity in China is improving. Last month's read was only 48.2. It is still below that 50 level. But what I think markets will be hoping for is some improvement in the China numbers that are coming out, and hopefully this will feed into a stronger third quarter GDP figure that will be released later in the year. A lot of the market was expecting that first quarter GDP was going to be the low for China, but second quarter GDP actually came in lower in that 7% range, and then so hopefully we'll see a stronger figure, a bounce back for the third quarter GDP in China. Though I think the market was a little more relieved rather than surprised or taking any kind of optimism from the number. We only saw a bit of a subdued reaction. The market did pare back some of the earlier losses, but the Aussie dollar only jumped up about 0.2 of a US cent, so not a huge reaction there. On the Aussie market today, we are seeing the staples, consumer staples and energy leading the way. The consumer staples continuing to perform well. After the Woolworths result, which beat expectations earlier this week, we've got Wesfarmers coming out tomorrow. There is a bit of an expectation that their food and liquor business will continue to outperform Woolworths. So a positive result sort of being built up into the share price there at the moment. Wesfarmers performing again well today. But Fortescue, one stock to look at today, it's actually fallen below the $4 level, sort of really testing sort of several year lows there. There's a number of factors at work here. We've seen a pullback in the iron ore price again. It's down around $123. Now, $120 for the iron ore price has been flagged as a very important level, particularly for Fortescue, in terms of whether it's going to have to raise capital in the future. We have seen with its quarterly production results significant cost blowouts, which is also added pressure in terms of further capital raising. So anywhere up to $1 billion if further debt funding could be sourced for Fortescue, and investors really selling out of that stock at the moment. But the Aussie market today has pared back those earlier losses, down around 0.1% now.
Yeah, and Oil Search releasing some production figures today. How does a company like this compare to the likes of Woodside and Santos? Woodside doing well today following a broker upgrade as well.
That's right, Woodside still Petroleum still performing very well. Oil Search, the market reaction has been a little more subdued, only up 0.2%. We did see a fall in revenues, though that was expected, and the actual revenue result that came in did beat UBS's expectations. They did increase production slightly as well, and full year guidance was unchanged. Oil Search does have a big focus in Papua New Guinea. At the moment, it does operate the Papua New Guinea oil fields in the highlands there, which it has since 1992. But those are now in a state of decline. So in terms of growth for the future for Oil Search, the $15 billion PNG LNG project with ExxonMobil will be a major driver of growth moving forward. And this project has been coming along quite well. They are expecting this to start up around 2014, barring any further delays. But the risk for this kind of project is the political instability we see in Papua New Guinea. Now, in terms of a long term, Oil Search does seem to be attractive, but significant earnings are still a little way off until this project comes online. And with the near-term political instability, a lot of investors may be choosing to like the likes of Woodside and Santos at the moment. We're seeing Woodside continue to gain support in the market. Woodside's just brought their Pluto LNG project online, and Santos just looks very cheap in a relative sense. It's actually around $10 a share at the moment. That's the same level it was trading in 2005 when oil was only trading between $60 and $70 a barrel. And the outlook for Santos back then, their growth options were not looking very good. So now it's trading back at that level around $10, and its growth options now look a lot better than it did back in 2005. So we are seeing some support. Oil Search does look a little bit expensive compared to those two at the moment. We've seen Woodside and Santos being beaten down significantly in the market. Oil Search has actually outperformed both of those companies over the past year. It does have a higher debt to equity than both Woodside and Santos, but its balance sheet does look strong. Oil Search, it does generate significant cash. So this result, pretty much the revenue's beating expectations, but the market only up about 0.2%.